whether that path towards the 4.5% by FY26, there is any risk to that path. As long as it is more or less assured that that path will be sacrosanct, I doubt that whether the number is 5.5 or a little higher, lower, it would make a big difference. We have kept this number slightly higher, thinking that being a pre-election year, there is a possibility of a small amount of additional expenditure. If that does not happen, then we could see a lower number as well.
Okay. In terms of the disinvestment target, what are you going at? It seems like the government is set to miss its target for FY24 as well, but you put the numbers in front of us. What is the expectation this time around?
So our suspicion is that they will start off just like every other budget, start off with the expectation that they will do something on divestment side. So maybe about 50,000 crores kind of a divestment target could be there in the budget. The interesting thing is that because we expect that the RBI dividend could be much larger this year, there is a bit of a buffer room that the government can have. Even if the divestment numbers fall short, that can be made up by RBI dividend. Just like in FY24, the shortfall in divestment has been made up by higher dividend from PSUs.
You know, bulk of, Samir, hi, morning, Prashant here. Bulk of the sort of consolidation, whatever has happened not by reducing expenditure, but because revenue growth has been so strong. Do you think that can continue to be the case as we look into the next year? Or should we assume aggressive revenue growth targets?
So this is where analysts have been caught on the wrong foot, I would say. The tax buoyancy has been significantly ahead of what the historical trends has been. And that's why we are finding that the tax to GDP ratio is almost approaching its historic highs. Definitely, it's at a post-global financial crisis high right now. Our sense is that in the budget document, the government will not be so aggressive with the tax buoyancy assumption. We are working with something like a 1.1 on the tax buoyancy, but historically we have worked with a 1. So we have also taken it higher by a small amount. But it would be a surprise if the tax buoyancy is taken to be even higher than a 1.1. In that case, the fiscal deficit targets could come down even more.
You know, we've got the April-December tax numbers yesterday. Samir, income tax has grown by 28% April-December, and corporate tax by 18% April-December. The overall tax is going down to 14% only because of indirect taxes. So why not a higher buoyancy?
So yeah, I mean, there is the thing is that there's no real good study on exactly what is causing this buoyancy to be higher. If it is about tax compliance, then we have to be mindful that the benefits of tax compliance is not infinite. Okay. In fact, one of the arguments is that because this year's tax revenue growth has been so high, it creates an unfavorable base effect for next year's tax revenue growth. So we have to be mindful of that as well.
Okay, yeah, that's a fair point. It does look like GST has helped get even more direct taxes, but that's visuals coming in of the finance minister entering Parliament. She just posed for the media cameras and now entering Parliament. The first pictures we had was of her entering North Block, and now the cavalcade has reached the Parliament. And we should be, of course, we are only about 65 minutes away.
Yeah, we're only 65 minutes away. And, you know, I always wonder why the Bahi Khata is red in color, right? I mean, a lot of people wonder about that. So it's largely because of good luck. Oh, so, yeah, according to tradition, that if you wrap anything in red, then it's luck and prosperity.
It's an auspicious color. It's a bridal color in India. Though, of course, it's not a positive color. Abroad, it's definitely an auspicious color. Samiran, thank you very much for joining us and prepping us to tell us which are the exact numbers we should watch out for. Of course, fiscal deficit, tax buoyancy, and the nominal GDP as well. Thank you very much, and we'll touch base with you after the numbers.
Yeah.
Neeraj Gambhir, the Group Executive at Axis Bank, is also with us. Neeraj, before I come to the budget, just parse the global environment for us. The chairman has said something, the Fed chairman, that he's pushing out the rate cut further down, quite emphatically. So it's not in March, but the yields have reacted lower. All told, what's the take for India?
So clearly, I think we are done with the rate hiking cycle at US. I think that's the affirmation that Chair Powell has made. And they're looking at the opportunity to start rates, but they don't seem to be in any rush to do that. And hence, the pushing out of the expectations of rate cut from March down the line to maybe May or June. I think May would be live sort of committee for that. I think one of the things that has happened in the recent past is the fact that US yields have actually inched down quite significantly from a high of about 5% to now down to about 4% or a little lower than that. And that has resulted in a significant amount of financial easing. And my view is that one of the reasons why they have kind of tried to push down the expectations to May or June is that they did not want to trigger a further round of financial easing in the markets because there is still concerns about whether this level of inflation is sustainable. And he mentioned that whether we will settle down at this or a higher level of inflation. So I think inflation is pretty much at the center stage at this point in time, and they will look to see at least 3 or 4 data points before they get fully comfortable about starting to cut the rates. But the next step is a rate cut is something which is kind of sort of affirmed in this policy.
Okay.
And that's what the long end of the market seems to be reacting to. The long bond yields in US have actually gone below 4% after the policy. I think markets seem to be taking comfort from the fact that now indeed the rate cutting cycle should start sometime soon.
Yeah, fair point. And there's, of course, a bit of a regional bank issue over there with some results not coming into good. But Neeraj, we have you on a slightly shaky line. We'll just set that right, take a quick break and come back. Lots more questions for you on the budget and the market borrowing program. In a bit, we are also going to be joined by Mr. Sudhir Kapadia, the partner, tax and regulatory services at EY, and Sunil Badala, the deputy head of tax at KPMG. We'll be discussing tax angles with them. Stay tuned.
There is further impetus towards startups, and generative AI is becoming a very, very important technology advancement, has become a important area. So what can we do to indigenize it? Like, there's so much of opportunity in bringing it to the masses, particularly in India, where there are so many regional languages and people living in rural areas. How do you make it to their advantage is something that we should encourage in, and it'll be very happy if the government could focus on that area as well.
I do think that they will have to look at the affordable housing segment in order to give more incentives for the affordable segment to get a higher income tax rebate. Because what has happened with the interest rates going up and the amount of standard deduction being the same, people are not able to get that benefit. And this is one, interest rate being higher and income tax deductions being leveled at for a long time, not being increased. I think the people of India would want that standard interest deduction should be increased in order to give the benefit to that. I think that should be the first demand from the Finance Minister of India.
Impetus on defense spending and infra spending should keep going because the top 3 budget outlays for 23 was defense, rail and metro and infrastructure.
First wish list with the government is always that at least the domestic players should have a level playing field. I think we are seeing unabated imports from China. In some form, it should be contained. There are also already DGTR recommendations of the CVTs and anti-dumping. I don't know how this can be addressed in the budget.
We think 3 segments, mainly roads, airports, and what they call a new energy ecosystem, are currently worth more than what all of Adani Enterprises is valued at right now. The segment that I'm probably most positive on, I would say within 5 years is probably airports. This is a segment I think can do $1 billion plus of EBITDA within 3 or 4 years. Close comps are trading at 20 times that, so you could see within 3 or 4 years, Adani Enterprise look to demerge that business at a value close to 20 to 25 billion.
The Budget Ballot. Vote for growth. On CNBC TV 18, India's budget headquarters.
Welcome back. We are continuing our special coverage on the union budget, actually the vote on account that's due anytime now. We have been speaking with Neeraj Gambhir, the group executive at Axis Bank. He heads Treasury there. Neeraj, you told us about the global environment and how we should parse it, that the direction clearly is yields are getting lower. But more importantly, on the budget itself, would a 5.5 upset the bond market if the fiscal deficit were higher? What kind of a market borrowing is the market prepared for? And what may be good, what may be bad?
So, Lata, in terms of absolute fiscal deficit number, I think we should see consolidation. Now, whether it is 5.3 or 5.5 is a matter of debate. But I think anything less than 5.5 will be a good number for the markets to sort of parse. In terms of borrowing numbers, gross number in the range of about 15.5 lakh crores and a net number of about 11.5 lakh crores is what the market seems to be sort of thinking at this point in time. So this will basically keep us at the same level as last year. And therefore, I think it basically means that from supply side, there is not likely to be any adverse shock in the next fiscal year. Again, this is a vote on account, so these are interim numbers. So there will be some tentativeness to these numbers, but if this is broadly the range, then I think market should be okay. Anything less than that in terms of borrowing program, and there is some expectation that given the fact that small savings have been doing very well, whether that could allow the government to actually look for a slightly lower borrowing number. If that materializes, then obviously it's a big positive for the bond market.
So actually, basically what you're saying is no negatives and perhaps one big likely positive if the borrowing number is lower. I mean, if it is higher, we don't mind because there is going to be big FPI buying. And if it is lower, it's bonus. So only upsides now for the bond market slightly. Is that the way to look at it?
That seems to be the case. I'm expecting that the borrowing numbers will not go up. They will either stay the same or they'll probably marginally come down.
The FX market needn't bother at all about the budget? Nothing over there for them?
Well, I think it depends upon what the policy is, and if we see a good cheer in the equity market and that results in some of the outflows that we've been seeing in the equities from FPIs, if that reverses, then obviously that's a bit positive for the FX market as well. But that remains to be seen how the market takes the budget outcome.
Thing at all that the budget can do about the tight liquidity that is bedeviling the banking system. The Reserve Bank has been giving money through repos, but clearly NBFC stocks are impacted. Everyone's impacted. Banking stocks, all of them reporting lower margins because of a high deposit cost. Can the budget impact this in any way at all?
So one of the key things that we would like to see in the budget is what is the cash balance that the government is expecting to carry forward from March to April. At the moment, the government is sitting on a fairly high cash level. I think in the month of December, it went up to as high as about 5 lakh crores. It has come down some bit because of the expenditure and some bond redemptions. But if the cash balance numbers are high, that basically means that this liquidity is unlikely to be spent going into the March. And this is, the last quarter of the year, and therefore there is a lot of focus on deposit growth and borrowings, etc. So if liquidity eases because the government is spending and hence Reserve Bank doesn't need to do as much of intervention in the short end of the market, I think that will be positive, and that could have some soothing effect on the money market rates.
All right.
That's important. Thank you very much, Neeraj Gambhir, for telling us what to train our eyes on, and have a good day yourself. So bond markets really don't have much of a downside here. There is only a possible upside if the borrowing is even less than 12 lakh crore, and of course, if the amount of cash that they have on their books is less for the current year, that will also be positive.
Absolutely. Well, Lata, all of this, right? The big buoyancy is coming from taxes. Taxes collected is not coming in from curtailing expenditure or anything. So that's the theme. So what can we expect as far as taxation is concerned for for you and me, the salaried class, and of course for the wider community. Surabhi is standing by with the tax expectations from this interim budget. Surabhi, over to you.
Thank you very much. Well, stability, I think, is the biggest ask and the biggest expectation that we're going into this budget with. And the Feb budget, of course, is a vote on account wherein no major tax changes are expected. But the fact that this is a pre-election budget is raising hopes that personal income tax perhaps will see some tweaks and that the government will partially sweeten perhaps the concessional income tax regime, which was also sweetened last year because they had introduced standard deduction at par with the old tax regime. So the big hope is that the standard deduction amount perhaps will be raised from 50 lakh to, who's to say, 1 lakh rupees this year, perhaps for both the old regime and the new regime. So that's the hope, or that is the big ask. The other demands for increasing deductions under popular sections like, ATC, medical insurance, ATD, home loan interest, which is section 24, the 2 lakh rupees deduction that we get, all of those are hopes and asks, but changes are really unlikely. Now, let's talk about other major direct tax expectations. Topping that list is an extension of the concessional 15% tax rate that is offered to new manufacturing units. As of now, the lower rate will be offered only to companies that set up operations by the 31st of March 2024. Industry is hoping that this timeline will be extended at least by 1 year, if not more, to power the Atmanirbhar or the Make in India push of the government. Then I'll come to 3 critical, long-standing, long-awaited tax policy moves that experts are hoping that the finance minister will address in some measure. Now, the first is the much-needed simplification in the capital gains tax regime, which currently involves, of course, a plethora of rates, as we all know, and different definitions of long-term and short-term. The holding periods vary across asset classes as well. The present regime is also not uniform with respect to the indexation benefit. Remember the big headline from last year. Some investments get that indexation benefit, while others, like debt mutual funds, no longer do. CII, in fact, has proposed a simplified capital gains regime, which will define long-term very simply as 12 months for all financial market assets, whether it's equity or fixed income assets, with a uniform 10% tax rate for long-term gains and a 15% uniform short-term rate for short-term gains. Now, the second major tax policy signal that the tax circles are really awaiting is the implementation of the global minimum 15% tax as part of the international tax framework, which is known as BEPS, base erosion profit shifting. Now, why do I say this is important? And signaling is going to be critical and vital over here. Over 40 countries have already put this global tax norm in motion, and India is expected to announce rules for its implementation here as well. This global minimum tax is likely to shore up the government's tax kitty, so the government should be, quite happy to do it, but it does require amendments in our tax laws, in the Indian tax laws. Now, while a rollout will probably happen after the general elections are through and done, industry is still expecting the PM to announce the intent and the directional action plan with respect to this global minimum tax and how India plans to implement it. So maybe some announcement in this budget. Let me come to the third major tax policy issue, and that is TCS and TDS. And we had so many headlines on this last year as well, right? Now, the hike in the TCS, or the tax collected at source for overseas remittances, remember that was hiked from 5% to 20% in last year's budget, and that had made sort of lots of news. The hope is that the FM will offer a way to perhaps offset this 20% TCS that we have to pay against the TDS, which employers are anyway cutting on salary income. So that would ease a lot of the cash flow issues that the salary class is facing. Then there is the long-standing request of, reforming, rationalizing, and simplifying the entire TDS regime itself by reducing the multiple rates and all the types of, payments to perhaps only 2 or 3 main categories, because right now you have this going into several sections, almost 30 sections of the Act, and there are multiple, rates in effect. So that would streamline the TDS payment and collection process. Finally, the industry is hoping for some tax incentives, perhaps to boost some of the key focus sectors like AI and green energy, with a specific ask of granting the green hydrogen and the green ammonia industry perhaps infrastructure status. So tax and consulting professionals will perhaps be hoping that if not immediate changes, the FM will offer some clear tax cues and clues to indicate the direction of tax policy on these big matters in Budget 2024.
Oh, that's a huge list, Surabhi. Thank you very much. Let's get the expert in. You spoke about tax professionals. We have one with us. Sudhir Padia, thank you very much for dropping into the studio. It's an exhaustive list that Surabhi is presented. Most likely announcement.
Most likely, I think about 75% of that we will have to wait till July, because it's very difficult to get all this in an interim budget. I think two very important points Surabhi made, capital gains overall and the TDS issue. Let's come to TDS. With the kind of tax buoyancy we have and the fact that 95% of the cash tax collections come from TDS and advanced taxes. Honestly, and with the fiscal deficit glide path in mind, I doubt if government will be having the boldness to reduce significantly the TDS rates, at least in the interim budget. So I think that part we should just manage our expectations. On the capital gains, Lata, as I've said before, frankly, the debt side has been completely overhauled in the last budget. This ask from industry, which was mentioned about making it 1 year for both listed equity and debt. I think we have to be careful there. The reverse may happen. I don't think we are going to get back on the shortening of the long-term tenure for debt. The simple reason being that this has been an ask, and rightly so, from the banking system for a very long time. And we know today that we are still in the banking
struggling
system
struggling
for deposits. So
The
I
last
don't
thing
see a
they will-
reversal of that at all. But, in other countries, why should it be only 1 year? Long-term gains on listed should be 2 years. If real estate is 2 years, gold is 2 years. So I think the reverse can happen. It may not happen now, but it can happen later. But, I think asking for this 1 year is, I think reminding the government too often may not be a great idea.
The other thing which Surabhi began by saying, the standard deduction from 50,000 to 1
so
lakh.
So I think that there is a very fair. So my personal view is that government will focus on the new tax system for sure. There is a clear and the right, right disincentive to move away from or to move towards the new system, and therefore, it's a simpler way to have a proxy increase in standard deduction, in my view, rather than try and have a mission creep and bring back some deductions from the old system. Because frankly, in a developing country, everything is important. Housing is important, health is important, social security is important. So rather than pick and choose, we'll get back to the old system. So I think it's much simpler, and that one can expect.
So only in the new regime, the deduction.
Yeah, I think that would be a very strong signal to say, right, that we want to move to so come into the new regime, move on and increase it only in the new regime. It helps also that, with the whole K-shaped recovery discussion, it really helps where it really is needed, which is at the relatively lower income slabs, right? And the thing about, in an election year, can you tweak? Well, more like optics, but now you have 10% kicking in after 9 lakhs. You can consider making that 10 lakhs. We talked about tax buoyancy, which government has some leeway there.
Yes.
And that would genuinely help a certain level of, income earners, which is what the ask is. But beyond that, I doubt if anything can be done.
April to December, the income tax growth is 28%.
Right.
The nominal growth of the GDP is only 8.9.
Right.
That's the level of buoyancy.
Yeah, absolutely.
So can there be some scope for giveaways?
Therefore, I said that they will do this, but I think knowing the government's fiscal rectitude, they'll keep a lot of buffer for the main budget.
I think it's all the other sections, they end up being better favorites, whether it's capex, whether it's rural. I think the salaried class has been waiting for a long time. But I do want to bring in Sunil Avadala into the conversation as well. Of course, he looks at all the taxation matters at KPMG. Sunil, good morning and welcome to the conversation. So we've discussed obviously the personal income tax, and that's a huge hope and expectation. But let me now come to some of the important issues on capital gains, because the fact is that while we are not getting this overall simplification of the regime, we keep getting these tweaks, and they at times can play havoc with not just the products that the industry is making, but with how investors are looking at our portfolios, whether it's debt funds or this or A type of insurance or B type of insurance. And we've seen that over the years. What would you expect?
So frankly, as Sudhir mentioned, that we have to be realistic. This is a vote on account, and therefore 75% or maybe more than 75% of these expectations will find place in the final budget. So if you ask me personally, I'm not expecting any big changes as far as capital gains tax regime is concerned. I think what we are really expecting right now is Surabhi, you talked about certain exemptions or concessional rate for, let's say, manufacturing company, which is coming to an end on 31st March 2024. I think that should be extended at least by a year. Likewise, there are other provisions. So for example, you have sovereign wealth funds, pension funds, which get exemptions for investing into infra sector. There are, units in IFSC which have special exemptions in the taxation regime, many of which are actually coming to an end on 31 March 2024, whether it is aircraft leasing, shipping, whether it is FPI investing from, gift city and so on. So I think all of those, we are expecting that, we'll get another year or so. So I think that is what is the realistic expectations. Yes, capital gains tax, regime needs some corrections, and which is what we've been asking for quite long. But honestly, I don't expect anything to happen today.
Okay.
What do you expect will happen? I mean, any one major, most likely proposal?
So as I said, all these sunset clauses will get extended. Yeah, there is one more thing. If you recall, in 2019, the government came up with faceless scheme for the income tax assessment. Now the transfer pricing and the DRP was kept for a later date. So earlier they said it's going to be implemented by March 22, which then they extended to March 24. I'm not sure whether government is prepared to actually roll out the faceless scheme for transfer pricing assessments and the DRP. If they are not able to do so, then I think today they will have to defer it by another year or so. So I do expect some mention of that in today's voter account.
Okay.
The other thing which I really expect is that when we are talking about individuals, there are 2-3 things, and you did talk about complicated TDS regime.
Yeah.
One specific issue is that these days we are seeing lot of NRIs who have invested in the properties and selling to the domestic people. So let's say if I were to buy a house from an NRI, I have to actually deduct TDS at the normal rate of 20% plus surcharge, and also I have to calculate how much is the actual capital gains tax. And if I'm unable to do so, I have to ask my seller to actually go and get a lower certificate from the tax office. Now that needs to be corrected. So for example, when I'm buying from a resident in India, it's a very simple process. I just deduct TDS at 10%, at 1% of the overall proceeds, and just deposit the tax. So I think something on those lines should come even when I'm buying house from a non-resident.
Sure.
So I think.
So simplification, Sunil, got your point. Simplification of the TDS regime, even if in part, if it comes through. Mr. Kapadia, come in on this. And also, I just want to, before we get into the break, also want your take on the larger, bigger issue that we don't talk about enough, which is BEPS. I mean, we're moving towards a global tax system, and there's been no word from the Indian government on which way we're going. Typically, the taxman should be happy, right? Because this allows India to earn more tax or collect more tax.
No, that's a very important. I wanted to come in on that as well. So there are 2 things here. See, we have to remember that coincidentally, in 2019, when India reduced the corporate tax rate for new manufacturing units, we arrived at a rate of 15% plus surcharge, which happens to be your global minimum tax threshold. So luckily for India, as far as the inbound investments are concerned, it will have very minimal impact as far as top-up taxes in the home countries are concerned. See, today multinationals are worried about top-up taxes, because if they have operating businesses in countries with a rate lower than 50, that's where they have to really worry about. So which is a great positive for India. It will not, however, lead to any increase in tax revenues.
Okay.
But India comes out as a responsible tax jurisdiction amongst those who are trying to compete at the bottom.
It's not undercutting on tax.
Right? So that's the inbound part. The point you made, Surbi, is relevant for outbound MNEs who are headquartered in India. Indian multinationals. Anecdotally, size-wise, I don't think there are so many. But yes, UAE has been a very popular jurisdiction, some others. There, India can hope to get some top-up taxes by introducing this And India is a very responsible member of this. To your point, I think there's a lot of work going on at the back end. They have not probably broadcasting it, but I expect a policy statement for sure from the finance minister, particularly on the back of G20. In fact, there's one minutiae here that the OECD has come out with a handbook. They have recorded at the specific request of India that on how the BEPS global minimum tax pillar 2 will operate guidance to policymakers. Only India's role has been acknowledged. So I think there's a huge contribution by India. But you are right, they've been very quiet about it.
And speaking, that's pillar 2, which deals with this global minimum tax. And there's also the whole issue of taxing global companies in India, significant economic presence.
That's
and I think there's a
That's
lot of confusion, right?
That's pillar 1. That's in fact, frankly, a more complex but a bigger reform. And that's where India would hope to get much more tax revenues. Remember, when that comes in, India will have to give up the equalization levy.
Yeah.
Right?
Oh.
And like other countries will give up their digital service tax, etc. So that's a much bigger one, more complex bound digital businesses operating in India.
But in the interim, you don't expect changes on digital.
On pillar 1, no, because there is the consensus is still eluding on pillar 1. Pillar 2 is certainly policy statement, yes, but pillar 2 we can expect more detailing. India will have to come out with legislation on that.
Yeah. The overall take, therefore, is that these reforms, pillar 1 and pillar 2, will actually mean a little more money for Indian companies. Well, Sunil, coming on that, do you think, therefore, some giveaway on income tax is good? First of all, the buoyancy is good. Secondly, it hardly ever gets indexed to inflation.
We're really hoping, Sunil, give us some hope.
No, I'm just saying there are arguments. You have the money, there is an election ahead, it's not in inflation indexed at any point in time. And, when was it last revised in terms of brackets itself?
Even the deductions, absolutely, even those
5-7 years ago. So is there, a case, do you think, that pre-election something may come?
No, I certainly think that there's a case for, let's say, increasing the standard deduction. There's a case for rationalization of some of the tax rates in those slates. But one thing which I think, the government can easily do is that, if you remember, we have now this old regime and the new regime of taxation, right? So, frankly, for a layman, it is very confusing and very complicated, because I have to actually calculate after claiming deduction under section 80C, 80D, if I'm coming to an income of 5 lakh rupees or low, then I go under the old regime. If it is 7 lakhs without claiming the deduction, then I am under the new regime, etc. I think what government can simply do, and by the way, this is what was intended, that eventually they want to move to the new regime where up to 7 lakh rupees you don't pay any tax. But what you are actually doing is by not giving deduction under 80C, 80D, etc., you are discouraging people to invest into all these small savings schemes, etc. So my hope and expectations would be that let's move to the new regime where up to 7 lakh rupees of taxable income I don't pay any tax, but I'm also allowed to invest into PPF and all other small saving schemes, insurance. I am allowed to take Mediclaim, and therefore I'm allowed to take deductions under 80C, 80D, which will effectively mean that, up to 9 or 10 lakh rupees, I don't end up paying any tax. So I think that is something which, in my view, the government can do it today. I don't know whether they will do it or not, but let's keep up with this.
Okay. Gentlemen, while we discuss taxation, we got markets, which are, by the way, at the day's highest point. The Nifty is up 52 points. And there is news at the bottom of the screen. This is significant for India Cements. Stock sold off 6%. We've got basically information that there have been searches which have been conducted. This is all source-based information. Enforcement Directorate, ED, has searched India Cements' offices in Chennai, where the company is headquartered. Although, we've written to the company, we're awaiting a reply, but we've seen many of these come through with regards to companies where these searches have been conducted. Stocks, of course, have taken a bit of a dive. Talking about compliance, etc., this is, we've seen many of these, right?
So, so there are two things.
But this is ED. This is not ED. The tax department. This one particular case.
So there are two things here, and it's interesting because in absence of the economic survey, you had the economic policy document, and it specifically mentions, ease of doing business for medium and small businesses in particular. I think, and you're right, it has nothing to do with the direct tax budget, some of these, but even if you look at the GST, kind of activities on investigations, etc. Certainly the feeling is that one has to be more discriminatory and discreet, rather than just have an airbrush and say, that, okay, on this issue, we'll go after every company and do fishing inquiries. But that's what is happening on the ground in some areas of controversy, for example, in GST, as also in some cases in income tax, particularly on TDS. And therefore, this oft-repeated point to make that, the design simpler. But I think the net, the maturity has to come to say, go after the wrongdoers, but don't try and paint with the same brush everyone in that sector. I think that we need to really acknowledge that.
Absolutely.
Okay, all right, gentlemen, thank you very much for being with us. Great having this discussion with you. And of course, we'll connect once the speech is over. Sunil, as well as Mr. Kapadia, thanks very much for joining. And we need to take a break on that note. Up next, we will be joined by a whole host of market guests to discuss their key expectations from Interim Budget 2024. Back in a bit.
Enterprise's current market cap is just 40 billion. Beyond that, you look at new energy ecosystem, which includes solar manufacturing, wind turbine manufacturing, and then there are plans for green hydrogen ecosystem. That green hydrogen ecosystem, which actually is not in our current valuation, is something that could, within 10 years, do, call it 7 billion hours of EBITDA. Here you're getting airports, your roads, renewable energy, called old energy or fossil fuels. It's what they do with mining and called commodity trading. So it's call it a diversified play on India, but with leadership that I think has proven the success of growing above market rates. I do think that has been a hindrance. I think some of that has been the lack of institutional coverage on the Adani Group. There's not many analysts out there writing research on it, which, when we first kind of stumbled upon it was a bit surprising, given I think it's the 10th largest non-financial stock in India, which is, now the most populous country in the world. So I do think that's a bit surprising in terms of feedback we got. We thought interest was very good.
The fundamentals piece has been good for 25 years. I don't think anybody watching this show needs to be reassured on HDFC Bank's fundamentals. It's been 20% loan book growth for many, many years. Over the last 6 months, over the last 6 years, take any horizon, this bank has pulled market share at a rate not seen in Indian banking. No other private sector bank, even in the current fiscal, no other private sector or public sector bank has come close to matching the rate at which HDFC Bank has pulled market share. For the last 5 years, the price to book has come off from, I think, 4.5 down to now 2 almost. This is trading at the lowest price to book it's ever traded at. And therefore, that's why in the last 6 months, we increased the position size quite sharply in HDFC Bank.
We are now counting down the last 30 minutes before Finance Minister Nirmala Sitharaman rises to present her event that the Finance Minister said, this is a vote on account. Don't expect anything spectacular. It hasn't stopped CII from saying a long list of budget wishes to the Finance Minister, Dinesh. But if I were to ask you, if there was one big idea that you believe could come through in this budget, what would it be?
No, I think if you really look at it, it is making sure continuity. So you can't say that, you have one big idea. And you make sure that this continuous focus on the infrastructure, and at the same time, make sure the equitable growth of the government is continued.
Okay. Rajiv Memani, we just finished a long discussion on the tax wish list, from TDS to TCS to BEPS and so on and so forth. But realistically, what's the expectation on the tax front as far as the interim budget is concerned?
Yeah, I mean, I would say that on the tax front, two things will be one is the continuity of the some of the sunset clauses that are there,
Yeah.
which is really new manufacturing companies.
So 15% concessional tax, another year extension?
I would say they should do two.
Okay.
That's what we have recommended from CII standpoint, specifically as manufacturing is picking up and it takes time to take those things. The second is, given inflation and given maybe what happened in 2019, I think there is some anticipation that on the personal tax side, especially under the new tax regime, the rebate may go up. The existing rebate is about 25,000, so that may go up to 30 or 35,000, which gives relief to people at the income levels that are lower. So I would say those two areas.
FAME and extension?
Yeah, I think that FAME is definitely something that people are expecting some policy. I don't know whether they will introduce that in the budget or that will be a separate piece. I am not sure of that. But maybe allocation towards that will be something that people will watch out for. So a lot of this budget would also mean, on sticking to tax, on whether it's on the capital gain side, whether it's on withholding tax side, BEPS, I think definitely they will make some statement on that. I think the government is well prepared. I think they know the issues last year. I think they are well prepared. Capital gains, I'm not sure whether they'll introduce in the budget. Withholding tax also, given the tax buoyancy that they are experiencing, I'm not sure whether they'll introduce in this budget. I think when we do the main budget in end of July or sometime in July, I think that's something those are the things to watch out for.
So the concessional tax rate of 15%, at least 2-year extension beyond the sunset of 2024, that's the big ask and that's the big hope. My bucket man, Vinayak Chatterjee, not here with us in person, but joining us virtually. Thanks very much, Vinayak, for being part of the CNBC TV18 budget coverage every year. You've got your buckets lined up for us. Take us through them.
Yeah, so Shireen, pre-budget, I have 3 buckets lined up for you. And hopefully post-budget, I may have 5. But we'll discuss that when we after the budget. Now, the 3 pre-budget announcement buckets. First is the level of allocation expected. Please remember, in FY22, the allocation increased by 30% from 5 lakh crores to 7.5 lakh crores. In FY23, it increased 35% from 7.5 lakh crores to 10 lakh crores. So this budget, FY24, furnishing from 7.5 lakh crores to 10 lakh crores. So this budget, FY24-25, I am expecting another 30% increase, which will take the union budget allocation from last year's 10 lakh crores to 13.5 lakh crores or 13 lakh crores. So watch the space, Shireen, and if it hits 13.5, then you got to recognize the fact that I hit the same button last year was correct, and this year hopefully one should hit the bullseye again. Bucket number 2, I am expecting a higher relative share increase in rail over road. That signal is very clear. And bucket number 3 is that there is, as core infrastructure sectors mature, particularly road, rail, and power, I am expecting a higher allocation this time, particularly pre-election, in the social infrastructure, which is health and education. So these are my 3 buckets. Over to you.
Thanks very much, Vinayak Chatterjee. If your CapEx hits the bullseye, the allocation number that you've given us here on CNBC TV 18, it's going to make industry very happy. It's better than the CII demand. CII demand is 12 lakh crores, and you're saying that you expect the government to deliver 13.5. So it's going to make everyone very happy. And of course, we'll have to talk about your 5 buckets, but that of course is post-budget. But the one big idea, and if PM Kisan was the big idea of 2019, what's the one big idea you think they might deliver this time around?
You're asking me to guess.
Yes, of course.
I think while I'm not able to point out the specific big idea, my sense is it could be in the area of women, because as we were discussing earlier, that acronym of GYAN that the Honorable Prime Minister created, where N is for Nari, I think there might be something. The big idea that I would love, if either it happens now or maybe in the budget in July, would be, as it is, the labor force participation ratio, as we've seen, has increased significantly, in the last 5 years. So a further push, and one of the things, if you start thinking about, and Sherin, you would know this much better than all of us here men, oftentimes women actually, choose to possibly not join the workforce because they have to take care of their children or elderly parents or parents-in-law. And if we look at many of the advanced economies, the infrastructure that they have for elder care and child care is something that really encourages women to go and join the workforce. And it also it can be a double benefit, because you can have women taking care of of children and elderly, and thereby releasing other women who want to actually have these people taking.
I have to say, I think that this could perhaps, and this is my gut as well, we're speculating, but I think that this could perhaps be one of the big ideas that comes through, incentivization of the childcare industry with the women focus. That perhaps could be something that we see the finance minister deliver on. Again, going back to directional statements, because that perhaps is what the finance minister is likely to do beyond the nitty-gritties of the next few months. A green transition fund, something that CII has proposed as well. And investment ministry is also something that CII is putting on the table. Do you believe directionally they might signal, the finance minister might signal some of these ideas around AI and so on and so forth as well?
Yeah, AI I think will definitely feature in some form or fashion. Green, something around how India's allocation on whether it's green hydrogen, green transition fund, also PLI schemes that are directed towards the green supply chain. I'm sure that those things will definitely find references. But I think the key thing, I would say the key highlight will be the way in which in the last 2-3 years, the tax revenues have grown up. I think, and what is the because every allocation that we are talking about, a lot of it would really depend on what's the assumption that they take of the growth in tax. I mean, last year one understood that they'd underplayed the growth in tax revenue, they'd underplayed this subsidy so that there is space and there is conservativeness in the way it was built up, so that, being the election year, the fiscal subsidy would go up and they have space there. If they're able to project a 12, 13%, 14% growth in tax revenues next year, then a lot of what you're saying, I think there will be enough fiscal space.
That's the number that KV Subramaniam has put on the table, that a 13% growth is what the government is likely to project. Gentlemen, we are still about 15 minutes away from the finance minister's speech. Vinayaka, final word from you on the big idea that you expect outside of the CapEx number before I let you go.
I will give you very quickly 2 big ideas. A certain tilt towards rural infrastructure to address the discussion throughout the year on low demand coming from rural India. And I agree with Rajiv that the next big idea would be a lot of mention on green energy. These are the 2 big ones.
Yes, Dinesh, please.
So employment-linked incentives, so that it is linked with job growth, and I would say MSME focus.
Employment-linked incentives to promote job growth. You wanted to make a point as well.
Just want to actually, I think, add to what Dinesh was saying. If you would recall the employment incentive scheme that was announced as part of the Atmanirbhar Bharat Yojana, PM Rozgar Yojana, has actually done very well. That 24%, 12% employee contribution and 12% employers contribution for firms less than 1,000 employees, and for firms like greater than 1,000 employees, taking care of the employees' contribution. I think that has helped. I was looking at the data.
about 60 lakh jobs have been either created or saved. I think that is something to build on overall, because employment, steps taken in that direction, I think would help. Just quickly, a couple of points. I think on capex, I just want to highlight, because oftentimes I hear a lot of commentary that, in my opinion, actually is too conservative fiscally, and this is something that I've actually been talking about, written about it in the COVID economic survey. I think the key point to remember is that we have to look at capex on the demand side perspective, infrastructure, and I think make sure we do not copy paste what we see. The 3% fiscal deficit number and the 66% debt to GDP number, that is actually from the Maastricht Treaty, which was a political union, bringing fiscal consolidation for a monetary union. So that is not something that we should just be taking and copy pasting. We should be thinking for ourselves.
You're on Vinayak's side as well.
Absolutely,
that
we need to.
35%.
Yes, and bottom line is, if we have to be an advanced economy, our infrastructure has to mirror that of an advanced economy.
All right, so that's the wish list. Those are the asks that the Confederation of Indian Industry is going into the interim budget with. Will Finance Minister Nirmala Sitharaman deliver on all of this? We will, gentlemen, check back with you post the budget, but the market's holding at this point in time. Let's go back across now to our market desk to tell you what's buzzing.
Shireen, thanks very much for that, Shireen. Well, the market's holding, as you said, absolutely. We're about, 50, 55 points higher at this stage. And of course, this is into the budget, so not bad after a flat kind of a start. Although I must say, there are lots of single stock accidents, which I just want to quickly mention, right? So start with Aurobindo Pharma. If you can just have these four names up. Aurobindo sold off 10%. All of these news related. That's a big move on a large pharma name. There is India Cements. There was that news on Enforcement Directorate conducting searches in Chennai, 8% lower there the last I looked. Paytm, of course, from the word go this morning has been down 20. That's locked down. And there is Fusion Microfinance, which is the latest edition, which the last time I checked is down about 10% as well. As I said, we're about, 15 minutes away from the budget speech, and we'll hear from the finance minister. Let's welcome in our next set of panelists. We have Ashok Wadhwa, founder of Ambit, joining us here. We have Sajid Chinoy, Chief India Economist, JP Morgan also with us. We'll be joined by Mahesh Nandurkar, Jefferies, Neelkan Mishra of Axis Bank in just a bit as well. Gentlemen, great to have all of you here. Thank you very much for your time. Ashok, we can start with you. First of all, it's a vote on account. And we were just talking about before we hit air, you were saying that will that speech last? How long will the speech last? You're not expecting very much, right?
No. I mean, it's a vote on account. So I think they will just do the usuals. Sunset clauses will get an extension. Hopefully not just until the budget, but a year, 2 years ahead. I don't really see many big changes happening in vote of account.
Well, Ashok, let me give the devil's argument. See, 2019 also was a vote on account, and we saw the PM Kisan Samman Nidhi announced. In 2019 also, it was very clear the BJP would win and win even better. It's the same sentiment now. That didn't stop the government from doing income transfer announcements. So just going by historical example, precedent.
And the July budget, like in the 2019, was pretty similar to the numbers they put out in the interim budget. So it was continuity in that sense. They were not wildly different. I mean, there was a very small difference.
So therefore, assuming they will treat it like a normal budget, what would you expect?
Why? If they do treat it like a normal budget, I would say there should be a very definitive plan. The taxman in me tells me that the government has done very well in terms of tax collection. 18% tax to GDP ratio is something we wouldn't have thought about 5 years ago. They've done well. They can continue to do better. But at a time when you have tax buoyancy, the banker in me tells me that you haven't done so well. Because, we haven't met any divestment target. At a time when the market is so bullish and your valuations are so rich, I would think that government should give a very definitive plan and say, we will divest IDBI by a particular date. And that, we have very clearly identified targets of what we will achieve during this current year. That's been the one miss every year for the last 3 years, Lata.
No, actually, there's nothing wrong with their targets. The execution has been seriously wanting.
Yeah.
Okay, let me get the economist in as well. Sajid Chinoy, member of the PMEAC and, of course, chief economist at JPM India with us. Sajid, can you make a case for a higher fiscal deficit? I know I read your report. You are stating that it should be 5.2, 5.3 because of the consolidation roadmap. But, you're doing well in terms of taxes at this point in time. Economy is doing well. And inflation is not an issue. Core inflation is actually going towards 3%. It's a good year to spend and stimulate, no? Will the 5.5 be taken very badly?
Lata, won't counter-cyclical fiscal policy suggest exactly the opposite? Okay. So your emerging markets are very good to spend in the bad times, in crisis times. Where emerging markets need to improve is to be symmetrically counter-cyclical, which is in the good times to actually make space. So if you ask me, at a time where growth has picked up, at a time where, as was alluded to before, tax to GDP is picking up, right? What I'm looking closely at is this year's deficit numbers. And what you might find is gross tax collections at the center could be as high as 11.6% of GDP, which would be the highest in 13 years. And interestingly, the consolidation that we get this year from 6.4 to 5.9 was envisaged to happen through expenditure compression, but may well actually happen through tax buoyancy. So the way we think about it, all of the consolidation this year will be because gross tax to GDP is higher and non-tax revenues are higher. Expenditure to GDP is the same as last year. In fact, the quality is improved because CapEx could well be close to 3.4% of GDP, which is double of what happened 4 years ago. So for me, what all this tells me is this is the time to reduce the deficit and make fiscal space, stabilize debt and bring it down for the next big shock. I think the government is exactly right that the target for the next 2 years needs to be about 4.5% of GDP. And so you'd like to take a substantial chunk out of it. I think the question is going to be, if you have to bring the deficit down and still keep your leg on the CapEx pedal, which I think is crucial, how do you achieve that consolidation? And to the extent that the tax buoyancy that we've seen this year continues into next year, or efforts are made to make sure that happens next year, then we see less compression on revenue expenditures. I think those are the trade-offs that we need to contend with. But I do think this is the time with growth recovering, with tax buoyancy picking up, that we reduce deficits and make space for the next shock.
Mahesh Nandurkar, who's head of research at Jefferies India, is also with us. And Ashok, you were saying there's going to be a vote on account interim kind of budget. I know Mahesh differs. Mahesh thinks that this is going to be, a full-fledged budget. Mahesh, weigh in on that to begin with.
Yeah, it is technically an interim budget, but for all practical purposes, I think we should view this as a proper full-year budget, in my view. A couple of reasons for that. One is obviously we have a track record as to what happened in February 19, and what happened in the final budget in I think July 19. There was hardly any difference. If you just compare the numbers on certain assumptions and fiscal deficit and the other sort of capex growth and targets and things like that, there was hardly any 0.1, 0.3, 0.5% difference. So we have that one precedent, to go with that. That despite being an interim budget, I think we should view this, as a full-fledged budget. Also, logically speaking, if the same party and if the same ministers are going to be assuming, the similar roles, it will be, very difficult to argue for, a very different budget in July, as compared to February. And the consensus today is that of a political quite seriously, because I think this is going to be, the budget for the full year, according to me.
All right, Mahesh taking it very seriously, but let's get in Neelkant as well. Neelkant, what is your sense? Whether this will be purely a vote on account budget, or will we see a full-fledged budget?
I think that this will be more of a vote on account, and that's also my belief is driven by public pronouncements from leaders in the government that this will be more of a vote on account, and that's, I think, as per the protocol as well.
Okay, so now that's the entire plate of menu of expectations. One expecting a full-fledged budget, the other expecting something that would be an also ran. Sajid, assuming that they will choose to make pronouncements, what would you rather have in terms of economic growth priorities? More income transfers, more capex, can both be managed? Just in terms of economic development, your priorities and expectations.
I think it's really important to continue with the capital expenditure push. I think the benefits of that are just being seen in the economy. I think the private sector will still take some time to fully rev up, and public investment multipliers are large. So I think there should be no letting up on the pedal of that. And ideally, we've already seen a very impressive effort. If capex to GDP this year prints at 3.4% of GDP, that would be a doubling over the last 4 years. Ideally, you want to see that ratio even higher. Can you go up another 20 basis points, take it to 3.6% of GDP? So I think that should be the first priority. I think on revenue expenditures, what we've seen is in the last few years, these have gradually been coming off as a share of GDP. We're still above where we were at pre-pandemic levels. So I think maybe there's some space for rationalization over there. But there again, I think we need targeted welfare support. I think given the recovery post-pandemic, targeted welfare support will be important, and I expect to see that. I think for me, the most exciting thing is on the revenue side. As I mentioned, this could be the first year where combined tax to GDP could be above 18%. So if we can ensure that that tax policy continues, and while I don't expect announcements and asset sales now, I think that is the big opportunity in the July budget. I mean, if we're not selling assets, to reduce deficits and pay down debt in these market conditions at these valuations, when will we, right? So I think, and remember, consolidating your deficit by selling assets is the least contractionary way on growth. So what you want to do ideally is bring deficits down, power off debt, but not do so without hurting growth. And the best way to do that is through asset sales, though I do think that will be more safe for the July budget.
Although as someone in the morning, I think it was Arvind Sanger who said, right, don't say it, just do it. And I think that makes sense.
Yeah,
because
they've said enough.
If you say it, I mean, market starts to assume it's coming.
To be fair to the government, I've
and,
gone through this with a lot of divestment ministry officials. They have a huge problem taking out all the non-corporate. These institutions were set up, for instance, SAIL. It was almost the entire Bokaro city was being run, or the entire Bhilai city was getting run. To just, like in BSNL, take away the land, take away all the other non-corporate items, assets, liabilities, and then, just the corporate entity has to be divested. It's becoming a huge problem for the government. So they're actually doing a lot of work, but it's not showing because ultimately you have to sell and bring the money. That has to hit the till.
Okay, all right. Well, let's get in Sunil Singhania, founder of Abacus Asset Manager, who joins us on the show. Hi, Sunil. Good morning. Good to see you. In a few minutes, we'll be hearing from the finance minister, and we'll have details with regard to the budget. What's top of mind on your expectation list?
So, it's very clear it's an interim budget, and going by the past, I don't think we're expecting too much. I think the reiteration of the stuff which they've been carrying on, that itself should be pretty good. We have seen over the last 6-7 years in particular, the frame of the government in pushing, planned expenditure, in ensuring that there is fiscal consolidation, as also, trying to kickstart the economy by, in between the budgets, propagating Make in India. I think all this is what we expect the budget speech to be all about. And it's an interim budget, so we don't expect at least major announcements, major changes.
A big income transfer, I mean, people are talking about it, an income transfer scheme, PM Kisan Samman getting increased to 8,000 or 10,000, and possibly, more schemes for affordable housing. Somebody was speaking about credit-linked subsidy coming back for affordable housing. Sunil, reactions. Do you think markets will react positively? Anything sector-wise?
There might be an announcement pertaining to all this, but I don't think they will announce the final, the final contour.
Oh, okay.
The interim budget, we don't expect anything major to be announced in terms of a scheme. Maybe they might make an announcement that, obviously the Prime Minister has always been vocal about, housing for all, water for all, gas cylinders for all. So all that will continue. But we don't expect any final scheme per se to be announced. Yes, we are running a good sort of a scenario in the sense that tax collections have been higher than what was envisaged. Maybe, some of the socialist measures might be introduced or increased, as you rightly said. But beyond that, nothing major.
These announcements, right, directionally, there's announcement effect because there's elections also. Sunil, but, just on that point, there was a time a few years ago when these kind of measures, the market would be very wary of, but not any longer. I think because of two reasons. One, there is acknowledgement that it is needed because of the K-shaped kind of recovery. And second, execution has been very good. So, you get the bang for the buck. Would you agree?
Also, I would agree with all the points you made, but additionally, it's not at the cost of fiscal consolidation. earlier, this social measures used to be made without any credence to what the government balance sheet was looking like. I think now it is very clear they're balancing it well. And, markets have also changed, the economy has also changed. And I think, as you rightly said, people are realizing that we need to ensure that everyone grows. And to that extent, as long as the fiscal consolidation and the fiscal direction of going to 4.5% fiscal deficit is there, the markets are not going to take it negatively. The other thing, Prashant, is we don't have any fuel subsidy now, any note. Fertilizer subsidy has come down significantly. So it's all about just basically maybe the food subsidy. I think it's fine.
Yep, exactly. Sajid, that's the point. Would it be actually positive? I mean, if there weren't income transfers, would it be negative? And if there were income transfers, either Kisan Samman Nidhi or some other scheme, it would be actually good, isn't it? Both as an economist and as a market watcher, because consumption has been so weak. PFCE, personal final consumption expenditure, up just 4% at a time when GDP is up 7%. So actually the absence is bad, you would say?
No, I agree. I think, we need consumption to broaden out. It's been driven by the upper end. And so having targeted welfare support, income support is important because the marginal propensity to consume is high at the bottom of the pyramid. So to the extent that this stokes demand, you then get more demand visibility, and that hopefully, along with the public investment, has private investment. So yes, you do want targeted welfare support, as I mentioned. I think the larger issue, Lata, from a 3-year perspective is, expenditure multipliers tend to be higher than tax multipliers. So if we have to consolidate our deficit, we need to do so without sharp expenditure compression, which then again puts the onus on the revenue side. If we can consolidate the deficit by higher tax to GDP, higher asset sales, that's the least contractionary impact on growth going forward.
Okay. Sunil, any pockets of value you're picking up now?
I think it's a tough market, frankly, not too much of momentum. But the good thing about India is that, we have so many listed companies in so many sectors. So banks have not performed. We continue to be optimistic on the bank despite all the so-called headwind. But I think that is one segment where there is interest. And obviously, everything to do with the development of infrastructure in India. I think there is still a long way to go for that.
Sunil, within the banks, what's it? Private or public sector banks? The private ones clearly have been lagging.
I think the larger private banks have also languished.
Yeah.
And the public sector banks, obviously, the top 4-5 names, I think there is still a lot of value.
Okay. Ashok, we have barely, 60 seconds? Your last wish.
I wish they say that on dividend distribution going forward, individuals will only be taxed, like in capital gains, at 10% or 15%.
Okay.
So instead of normal tax of 39%, that is the highest bracket, just bring it down to a fixed dividend tax in the hands of individuals.
Yeah, Sunil is also going to love that because that will be extremely market friendly if they were to announce. I don't know if I should risk another question with Sunil or... okay, we have a minute more. Sunil, if you have one wish, what would you want them to say? Will it be capex, income transfer? Just one, last one wish.
I think continue with what they're doing. Obviously, what Ashok said would be music to the ears, but continue with what they're doing.
Okay. Sajid, best tax buoyancy number? 1.1, 1.3, what? 13% growth in taxes is fine?
So this year, we're tracking 1.4. We're getting 13% on a nominal GDP of 9, but I think the tax has been quite conservatively budgeted. I would expect 1.1 on a nominal GDP of 10.5.
Okay, so 12% tax growth.
Around 12 on a nominal GDP of 10.5.
All right. I think it's 28 seconds, 27 seconds. So I won't risk another answer because I might have to cut into you all. So Sunil, Neelkant, Mahesh, Ashok, all of you, Sajid, thank you very much for being with us. We're going to touch base with most of you after we listen to the speech. As we get into the speech, what's the state of the markets? Markets actually not doing too badly at all. We are still outperformers in the global firmament. We have just cast aside what the US has done. No rate cuts over here, except a bit on mid-caps, which anyway were overpriced. And there's a lot of green in the fixed income screen. None of you all care about it, but the bonds are soaring. 7.13 on the 10-year. It's like a 5-6 basis points lower.
Yeah.
That's almost a rupee higher on bonds. And the rupee as well. Strong rupee. With that, we welcome the Finance Minister's budget.
माननीय सदस्यगण, आपको बुलेटिन भाग 2 के माध्यम से पहले ही सूचित किया गया है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां आपको हार्ड कॉपी के रूप में उपलब्ध कराई जाएगी। अतः बजट प्रस्तुत हो जाने के पश्चात माननीय सदस्य बजट भाषण की प्रति प्रकाशन काउंटर से प्राप्त कर सकते हैं। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात उसे मेंबर पोर्टल पर भी उपलब्ध करा दिया जाएगा। माननीय वित्त मंत्री जी,
Honorable Speaker, I present the interim budget for 24-25. The Indian economy has witnessed profound positive transformation in the last 10 years. The people of India are looking ahead to the future with hope and optimism. With the blessings of the people, when our government, under the visionary and dynamic leadership of Honorable Prime Minister Shri Narendra Modi, assumed office in 2014, the country was facing enormous challenges. With Sabka Saath, Sabka Vikas as its mantra, the government overcame those challenges in right earnest. Structural reforms were undertaken. Pro-people programs were formulated and implemented promptly. Conditions were created for more opportunities for employment and entrepreneurship. The economy got a new vigor. The fruits of development started reaching the people at scale. The country got a new sense of purpose and hope. Naturally, the people blessed the government with a bigger mandate. In the second term, our government, under the leadership of Honorable Prime Minister, doubled down on its responsibilities to build a prosperous country with comprehensive development of all people and all regions. Our government strengthened its mantra to Sabka Saath, Sabka Vikas, and Sabka Vishwas. Our development philosophy covered all elements of inclusivity, namely social inclusivity through coverage of all strata of the society, and geographical inclusivity through development of all regions of the country. With the whole of nation approach of Sabka Prayas, the country overcame the challenges of once in a century pandemic, took long strides towards Atmanirbhar Bharat, committed to Panch Pran, and laid solid foundations for the Amrit Kal. As a result, our young country has high aspirations, pride in its present, and hope and confidence for a bright future. We expect that our government, based on its stupendous work, will be blessed again by the people with a resounding mandate. Inclusive development and growth. Our humane and inclusive approach to development is a marked and deliberate departure from the earlier approach of provisioning up to village level.